To the trade that we've just got, which was worth $250, and all of a sudden, your $650 is getting closer and closer to $1,000 per contract since we started chatting about this process, and that's pretty good stuff. And that's what we've got to try and do, is focus. We had a little chat about that as well with Nick earlier, about focusing on a market and getting to become a specialist in that market instead of a generalist. We talked about Nick's namesake from South Africa, and that was his biggest weakness, was that he couldn't sit still for 2 seconds. He needed to trade so many different markets, and he needed to learn so many different things, and he was all over the place, and he never became a master of any until he stopped doing that. And when he did stop doing it, suddenly he found himself getting successful. Suddenly he found himself working for a prop firm on a grains desk, and started to make consistency the main objective. And from that point onwards, it's just down to you. And that's what we've got to try and understand, is that when we start re-engineering the best trades, you start learning the best trades. When you start re-engineering why this trade made so much money, and you go into depth about what you were looking for, you can start to recognize that you only have to find 1 or 2 of these a day, literally, in your market. Because when you first come into this classroom, the temptation is to learn about bonds, and then oil, and then Forex, and then oil, back to gold, then onto the S&P, then somebody says the NASDAQ, and you think that's where the secrets will be. The secret isn't in finding the market. The secret is in finding the keys to that one market. And from that, you can start to develop a career. From that, you can start to develop a trade that, and eventually, because you're now a master of that trade, you can apply that mastery to every other market that you then pick up. If you want to pick up any other markets, of course, you don't need to. And it all comes from this ability to become a master of one. And it's quite important. It's quite important, because you start focusing all your energy into one place. And that focus is so important for most people, because it's tough at the best of times. But if you think you're going to start trading 5 or 6 or 7 or 8 markets against the best in the world when they're trading one market, nah, sorry, it's not going to work. Anyway, welcome in, guys. I hope you're all good this morning. Data-wise, quite quiet overall. There hasn't been an awful lot of news coming out. Of course, there's the usual news about Omicron. Is it not? What is it? What is it not? And all these kind of things going backwards and forwards. The UK government decided on no extended lockdowns between Christmas and the New Year. That is ultimately still open for adjustment, depending upon the outcomes. And the big debate in the UK has been about whether you proactively lock people down on the basis that you don't know what it's going to do, or you reactively lock people down on the basis of what it does, is the big argument. And I don't think there's an actual right and wrong answer, because hindsight is the only way you're going to determine who was right. So nobody's going to know that one in advance, so it's difficult to pick sides. But the reactive suggestion, of course, is that you could become completely overawed with the number of cases, for example. But the negative to that is that you could be locking down for absolutely no reason whatsoever, and it's costing you billions and billions and billions of pounds to do so. So it's a very, very difficult one for politicians. I don't envy their choices at this point, because they've got some scientists telling them one, they've got some scientists telling them something else. It's a very difficult decision to make. And I think I suppose a lot of them are trying to do their best, but not doing particularly a good job of it. But anyway, welcome in. It's still a bank holiday in the UK today. There's not an awful lot of business from London, that's for sure. So nothing from the London session in terms of data. So very, very quiet bank holiday conditions in the London session. We're starting to see some volumes picking up in the US this afternoon. We've got next to nothing in terms of data. We've got the HPIs coming out at 2 o'clock this afternoon, in line with forecast, in line with prior, sorry. And then we've got the Richmond manufacturing at 3 o'clock. and the Richmond manufacturing in line with forecast as well. So no price discounting required for the dollar, and as a result, you can see the dollar's really not went anywhere this morning. It's went slightly higher, pinned off the top edge, slightly lower, pinned off the bottom edges from the overnight sessions here. So there's nothing really of any particular interest in this one. And yep, that's all we can really say about it. Nothing of any particular interest. Kind of sums everything up, doesn't it? So let's see what the afternoon has for us. Obviously, commercial still not really connected. There won't be commercial interest until effectively January. They're not wanting to ruin their end of year bonus checks, so they're quite happy to wait until January for a new flush and trade opportunities, liquidity volumes start coming back in second week in January perhaps, and that's when the commercials come back to their desks. In the meantime, it's going to be dominated by momentum-based algorithms, as it always has been. The last 10 years has been dominated by momentum-based algorithms, and only if we get a big news event coming out over Christmas do we get the commercials taking some sort of interest in what the business has done. So that's where we're at. Got to grab a little bit of lunch, and when we come back, we'll get tore into the starting points for some of this re-engineering that Kim fancies doing. So we'll have a look at that, and we'll obviously work our way through why that's important, why it's useful. We'll give you a basic introduction to the Ron Friedman concept, and we'll take a look at it for all those of you that are not familiar with it. And